What's up everyone, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is October 13th, 2025, and we are diving deep into Ethereum, symbol ETHUSD. The markets have been incredibly volatile, and there's a ton of news to unpack before we get to the charts. First, the entire crypto space was rocked by fears of an escalating U.S. China trade war, with threats of new tariffs triggering a massive sell-off. This wasn't just a small dip. Reports are calling it one of the biggest liquidations in history, with some sources claiming $19 billion was wiped out, and ETH-specific long positions saw over $235 million in liquidations. This event led to what many are calling a flash crash, where Ethereum plunged from near $4,300 to a shocking low of about $3,500. However, just as quickly as the panic set in, reports emerged of a misunderstanding regarding the tariffs, causing sentiment to reverse sharply. This led to a massive influx of capital, with an estimated $180 billion flowing back into the crypto market, fueling a strong recovery. Despite this short-term chaos, the long-term sentiment for Ethereum has some strong bullish catalysts. For example, Grayscale just enabled a dividend-like staking feature for its Ethereum ETFs, a move that effectively boosts returns for investors and signals strong institutional confidence. We also see reports of whale accumulation, indicating that large investors use this dip to increase their holdings, betting on future gains. So we have a classic conflict, a market shaken by macroeconomic fears, but supported by strong underlying fundamentals and institutional interest. Now let's see how all of this chaos is reflected on the price charts, starting with the big picture on the daily time frame. Looking at the full daily chart, we can see Ethereum's journey over the last year and a half has been a wild ride. We saw a major peak back in August 2025 around the $4,800 level, which news reports correctly identified as a key resistance that ETH failed to break. Following that failure, we entered a period of correction, which was violently accelerated by the recent flash crash news. Right here, on October 10th, you can see this massive red candle, representing the tariff-driven sell-off, where the price plummeted from a high of over $4,300 down to a low of $3,500 in a single day. That low around $3,500 is now a critical psychological support level that the market will be watching closely. But look at the response on October 12th. We have an enormous green candle, showing an over 11% recovery in one day as buyers rushed back in once the trade war fears subsided. This paints a picture of extreme fear followed by extreme greed, and confirms there is significant demand for ETH below the $4,000 mark. Currently, we are trading around the $4,163 level, caught between the recent crash low and the resistance that formed before it. Let's zoom in on the last couple of months to get a clearer view of these key levels. In this focused view, the battle lines are much clearer. We can see the price trying and failing multiple times to break above the $4,800 area in late August and early September. After that rejection, the price established a clear downtrend, culminating in that dramatic drop to $3,500. The subsequent bounce has been impressive, but we are now approaching a potential resistance zone between $4,250 and $4,400. Analysts mentioned this zone in the news reports, and it's where sellers who bought before the crash might look to exit their positions. A failure to break through this area could signal short-term weakness and a potential retest of lower support levels. Conversely, a decisive break and close above $4,400 on the daily chart would be a very strong bullish signal. The volume on that recovery candle on October 12th was significant, suggesting strong conviction from buyers. However, the volume has tapered off since then, indicating we are now in a period of consolidation as the market decides its next direction. Now, let's drill down to the hourly chart to analyze the structure of this recovery. Switching to the 1-hour chart, we can see the anatomy of the crash and recovery in high definition. Here is the waterfall decline on October 10th, followed by a period of bottoming out around the $3,700 to $3,800 level. Then, on October 12th, you see this explosive move upwards, taking the price from around $3,700 to over $4,100 in just a few hours. Since that explosive move, the price action has been forming a potential bullish consolidation pattern, characterized by a series of higher lows. The price has been tightening into a range, generally finding support near $4,100 and facing resistance closer to $4,200. This tightening range suggests that a significant move is likely imminent. A breakout above the recent highs around $4,200 could trigger the next leg up towards that major daily resistance at $4,400. However, if we break down below the support trend line, currently around $4,100, it could signal that the bullish momentum is fading, opening the door for sellers to push the price back towards the $3,800 support zone. For traders with a shorter time horizon, let's quickly look at the 15-minute chart. On the 15-minute chart, we can see the price action over the last day has been very choppy, trading mostly sideways. After the big push-up to the $4,160s, the market has been catching its breath. We can see multiple tests of support in the $4,100 to $4,130 range and rejections from resistance near $4,170. This is typical consolidation behavior after a strong trend. Intraday traders should be cautious about taking large positions within this range and might want to wait for a clear breakout in either direction. A move above $4,170 on high volume could be a good entry for a short-term long position, while a break below $4,100 could be a signal for the bears. Now, let's go back to the daily chart to summarize our findings and discuss potential scenarios. Alright, to recap the key levels we've identified on the ETHUSD chart. Our most critical support level sits at the flash crash low around $3,500. Above that, we have a more immediate support zone between $3,720 and $3,800, which was the bottom of the recovery. On the upside, immediate resistance is forming between $4,250 and our major hurdle at the $4,400 level. Beyond that, the psychological and technical resistance at $4,800 remains the key level for bulls to conquer for a new uptrend. So, what are the likely scenarios? The bullish scenario, which I would place at about a 60% probability, is that the price continues to consolidate before breaking above the $4,400 resistance. The powerful bounce from the lows shows buyers are active, and the positive institutional news provides a strong tailwind. A break above this level would likely see a quick move to retest the $4,500 to $4,800 range. This scenario becomes more likely if we see Bitcoin remain strong and no new negative macroeconomic headlines. The bearish scenario, with about a 40% probability, would see the price get rejected from the $4,400 resistance zone. If sellers take control and push the price below the $3,800 support, it would signal significant weakness. Such a move would likely lead to a retest of the flash crash lows around $3,500. This would be reinforced if we see renewed fears in global markets or large-scale profit-taking. Things to watch for in the coming days are the trading volume on any breakout or breakdown attempts and Bitcoin's price action, as it often leads the market. Also, keep a close eye on any further developments in U.S. China trade relations, as we've seen how sensitive the market is to that news. Thank you for tuning in to Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and ring the bell so you don't miss our future updates. Please remember, this video is for informational purposes only and is not financial advice. Cryptocurrency markets are highly volatile, and you should always do your own research before making any investment decisions. Stay safe and happy trading.